This is Real Wealth Network's 2019 market overview for Cincinnati, Ohio. Cincinnati, Ohio is a cash-flowing real estate market where investors can purchase real income property that has a strong chance of appreciation for $64,000 to $194,000. In this video, you'll learn about the top factors that make Cincinnati one of the strongest real estate markets today: affordability, cash flow, and equity growth. Before we get to that, here's a little background information. Located on the northern banks of the Licking and Ohio River Junction, Cincinnati is the third largest city in Ohio and 65th largest city in the United States. Cincinnati was the first major American city founded after the American Revolution, which is why it is sometimes thought of as the first purely American city. It was also one of Winston Churchill's favorite cities. He called it the most beautiful of the inland cities of the Union. Cincinnati has become a popular destination for new and relocating corporate headquarters, including 10 Fortune 500 companies and 17 Fortune 1000 companies. Some of the most well-known of these companies include Procter & Gamble, The Kroger Company, Macy's Inc., and General Electric. Today, the Cincinnati metro area is recognized as one of the nation's 25 fastest developing regions, according to the Brookings Institution, with a gross metro product of $119 billion. With cost of living and housing still below the national average, Cincinnati also offers great opportunities for real estate investors this year, especially for those who are looking to invest in real income properties that'll produce positive monthly cash flow and have a strong chance of appreciation. Let's take a closer look. In January 2018, the median price of three-bedroom homes in Cincinnati was $150,000. This is 26% less than the median value nationwide. In the neighborhoods where Real Wealth Network members invest, the median purchase price of three-bedroom homes was $115,000 in January 2018. This is 43% lower than the average three-bedroom home nationwide. This shows us that Cincinnati property values are uniquely affordable, especially in the neighborhoods where Real Wealth Network members are investing. In January 2018, the median monthly rent of three-bedroom homes in the U.S. was $1,427. This is 0.71% of the median purchase price of $202,000. The median monthly rent of the average three-bedroom home in Cincinnati was $1,272, which is 0.85% of the average purchase price of $150,000. In the neighborhoods where Real Wealth Network members invest, three-bedroom real income properties were rented for an average of $1,092 per month during this period. This is 0.95% of the average purchase price of $115,000. This shows us that Cincinnati is a strong real estate market for cash flow, especially in the neighborhoods where Real Wealth Network members invest. Between January 2012 and January 2018, the annual appreciation rate of three-bedroom single-family homes in the Cincinnati metro was just over 3%. Nationally, three-bedroom home values appreciated over 5% annually. During this 6-year period, the total appreciation of three-bedroom homes in Cincinnati was 16% versus 41% nationally. Although Cincinnati is appreciating more slowly than other U.S. markets, real estate values have been rising consistently year after year. If the demand stays strong, we can expect that property values will continue to rise in the coming years. This is good news for investors interested in equity growth. Between January 2012 and January 2018, the median rent for three-bedroom single-family homes rose by over 15%, which is just under the national average of 17% for this period. This shows us that Cincinnati rents are rising at a similar pace to other cities across America. This is good news for investors interested in increasing their monthly rental income. Between 2010 and 2017, Cincinnati's population grew by 3%. This is 42% less than the national population growth during this period. This shows us that Cincinnati is experiencing population growth. Although this growth isn't as rapid as other markets, it is still a good sign of a strong real estate market. In the last year, the Cincinnati metro has created 9,100 jobs. This is an annual growth rate of 0.83%. This is 52% lower than the national average. This shows us that Cincinnati is creating jobs, although not as many as other markets today. That said, any job growth is a good indication of a strong real estate market. So let's do a quick recap. Number 1, Cincinnati is affordable. In some Cincinnati neighborhoods, it's possible to purchase properties for 43% less than the national average. Number 2, Cincinnati is cash flowing. Cincinnati offers investors the opportunity to rent income property for an average of 0.95% of the purchase price, which is much higher than the national average. Number 3, Cincinnati is appreciating. Although Cincinnati is appreciating more slowly than other U.S. markets, real estate values have been rising consistently year after year. If the demand stays strong, we can expect that property values will continue to rise in the coming years. This is good news for investors interested in equity growth. Number 4, Cincinnati demand is rising. Cincinnati rents are rising at a similar pace to other cities across America. This is good news for investors interested in increasing their monthly rental income. Number 5, Cincinnati is growing slowly. Cincinnati is experiencing both population and job growth. Although this growth isn't as rapid as other markets, it's still growth. And growth, along with affordability, which Cincinnati definitely still offers, is a good sign of a strong real estate market.